The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN.com. Don't forget you can listen to us anywhere on your mobile phone at TFNN.mobi, and 9 hours of live trader commentary each and every day. You can also watch our screens and charts as we're reviewing the markets right there on Tiger TV. Let's check out where the markets are right now. We got the S&P pretty flat on the day. It's up a couple ticks at the moment. We got the Russell down 7 points. The Nasdaq down 1.25. Looking on over at just a 1.25 points, so meaning nothing, 5 ticks. Looking on over at the Dow, that's down 20 points right now. Looking at our metals, let's check out where they're at. We have copper right now. It is pretty flat, along with silver. Gold is down about 0.5% right now, down about $6. The energy sector here, we got natural gas up 2% on the day. We got oil down about 70 cents on the day. Don't forget, we got oil inventories coming up tomorrow. The schedule changes up a little bit with having a holiday weekend there. Check it out. Corn, we got corn just up just a few ticks. We got soybeans up 3, so pretty slow right there. Euro dollar is down 43 pips. Aussie dollar is down 33. Pound dollar is down 102 pips. So nice big moves on the pound. We got dollar francs up 15. We got the dollar CAD up 14. Dollar yen is down 17. Look at the yen pairs here with the Aussie yen down 54. The euro yen down 67. The pound yen down $1.36. So pretty nice move there on the pound yen. A great volatile pair. If you're looking for volatility, that is a good place to go. And let's see here. Euro pound is currently up 28 pips on the day. And let's see here what else we got. Checking things out. We have a few more things I wanted to look at. We were looking through the plan yesterday, talking about it, and talking about some of the movements from last night. But the big thing was just going through the news reports for tomorrow, because that's when things start picking up a little bit on the news. Not a major news week overall, and I went through just a pound plan with you and how to take advantage of that going into the morning. And again, weekly inventories on oil tomorrow. That one is not sort of a normal trade for me. I'm probably going to step aside on it because it's on a different day of the week. It's an abnormal. I mean, it may be a great trade, but different day of the week. Averages aren't going to line up. The whole thing's thrown off. So natural gas, of course, same time as usual. Will be on Thursday. Unemployment claims, you can take advantage of that. But just to make sure you're caught up, if you didn't catch the show yesterday, what to look at was let's see here. I'll pull up our news report here for you. There's a lot of these sites. Forex Factory is one of them. It gets really slow. I don't like using the site whenever news releases come out because it gets really overloaded. I like their layout. It's pretty cool. At least simple, But a lot of historical data information on there. Investing.com has a great one too. But just one of the many that are out there. And so if we look at what's going on for tomorrow, then you're going to see we're going to have preliminary GDP right here in the U.S. That's going to be our main report. We'll also have pending home sales. And so on both of those, I want to believe we're looking at euro dollar. And I'll pull up the plan again for you. And we'll go through it just so you have that plan, you have it ready. And we'll talk about Friday and what you can do to take advantage of the Friday report. But for the U.S. GDP, again, there's 3 GDPs. This is a preliminary. There's also an actual and an advanced. So basically, there's basically they release like an early one, a middle one, and a late one. So final GDP. And so you just want to make sure you understand that the different reports that come out on the GDP, and this is not as big of a impact as the earliest one that comes out. Let me see here. I'm trying to find the information for you. Pulling it up. But okay, so I got all the stats over here on the side, and it shows you all the reports when they came out. It had the seismic quake index. I used to be into that, but I found out it just wasn't really giving me the consistency I was hoping for. And so I found some better ways to do it. And it's building a Forks data engine that gave me all the information. And working on making that a distributable tool. So that way you can even come up with your own news plans. But right now, looking at the last 12 reports on the Eurodollar, when the U.S. preliminary GDP quarter-over-quarter report comes out, then what I noticed was whether you used 11 or 3, we got about 24 pips. And the last one, 6 to... basically the first number I list is if you got out at 11 a.m., you use 11 a.m. expiration for an iron condor on Nadex. And the second one is if you used an iron condor for the 3 p.m. expiration. 10 a.m. expiration and 3 p.m. expiration. So if you don't know what Nadex is, make sure you hop on over to TFNN.com. Click on the Nadex banner right here on the right side of the page, and then go to Trading Demo Trading Account. And you can get a demo trading account in about 15 seconds. Set that up. You'll be set and ready to go. They'll send you an email with a password. You can log in with funny money, cost you nothing, let you try everything out. They got education there. They have a YouTube channel with education. Of course, we have education as well for you. And got the scanner, which is will give you a massive edge compared to trying to do it in any other way. But what you want to do is you want to get a hold of that scanner. It's going to help you out and help make this a lot easier for you. And one of the things I tell people is it can look intimidating, but it really makes it easy if you just stop for a second, because whatever you're doing with the scanner, you're having to do with your mind, or you're not trading correctly when you're picking out the best spread. So what I'm trying to do is make it, instead of you have to spend 10, 20, 30 minutes finding the best spread or the best binary, you can do it in seconds because all the math is automatically done for you. All right, so we got that set up. We got it going. Now, what are the stats we want to look at for the GDP? And again, we're looking at 10 a.m. versus 3 p.m. expiration. How far has the Eurodollar moved on the GDP report for the last, X number of, releases? And what we got here, so to make sure I'm pulling up the right one, and click on a couple buttons so I can get all the information. Okay, so last report came out. We're looking, they look like they need to update their stats, but about 24 pips. And then, let's see, 6 to 14 pips, 1 to 5, 25 to 35, 25 to 35, 83 to 92, big move, 1848, 1719, 3823, so in that case, waiting longer worked out better, 2446, and 2219, 185, so 100 on one, 85 on the other. So what does that mean? That basically means that 11, looking at all of them, we had 2 reports that moved big, okay, out of the last 12. The rest of them were 25 pips or less. Many of them were like 5 pips, 10 pips, 6 pips, okay? So what that means is I would want at least 25, if not $30, but at minimum 25, I'd probably go and say minimum 30. But I want to be able to bring in $30 of maximum profit on a condor. So I'll go in here, I'll pull it up, and I'll basically try to find one that's going to give me 30 pips when I want to do the trade. And, whichever one that may be. And so I'll go in, I'll choose something that's a little bit more volatile at the moment. It's always a hard time of day to do this because this isn't really when you would do most of these trades unless there was a major news report about to come out. And let's see if we can find anything. So like I said, there's just not a lot of volatility in the market at all right now. Everything's really well priced. It's nice. You don't have all this extra implied volatility, which is good for going directional. Is a little more tough for collecting premium. So that's why you got to learn both, because you have different market environments where when volatility is low, that's a good time to trade, directionally, because you can buy options just incredibly cheap. When implied volatility is really high, that's a good time to collect premium. And, I've been talking about the VIX off and on the show here. And what you'll see, let me bring that back up for you, is we're at major lows right now. Let's see if I can back this up a little more for you, a little more data. And come on back. There we go. So last 10 years here, we really haven't, we've hit this low one time. That was back in March 2012. And before that, the last time we were here at this low of a price on the VIX, we were looking at March 2007. That's literally the last time we were this low. So the investor confidence is extremely high. I was reading about a Scottrade report that talked about investor confidence, 96% of people being bullish on the market of traders. And let's see here. Let's go in. And we'll just look at March of 2007 here and see what happened. So we got this high. That was, we were approaching the high in the market. Now, we didn't hit it immediately. Okay, let me, I'll bring both of these to the exact same style. So go in here, give me the last 10 years, give me monthly, and then give me a normal chart. And we'll pull up the VIX, and then the SPX is technically what we're looking at here. So zoom on in to, let's see, the last time we were at the low. So we'll go all the way back here and grab that down to monthly. Once you get your chart set up, the nice thing is you compare them side by side. It lets you see the sort of the picture a little bit better. All right, so right back here was the last time we were at this level. That puts us back at 07. If we go on back here to 07, we can do the same thing. And you'll see, you start lining it up. Let's see here, 07, 08, there we go, yep. So, right, there we go. So, we had the VIX, at extreme lows, okay? And, again, lows that they were just starting to hit back here. I'm trying to go to the exact same level. We have to actually go back to 2006. I thought it was 07. So right here to 06. And at this level for the month, the low on this month, like I said, the last time we were there was May of 2006. So what happened in the market last time the VIX got this low? What happened? We're going to talk about that right after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. And all right, so going through, we're talking about the VIX. What happened last time it was this low now? It doesn't happen, like, immediately, okay? So I'm not talking about the market's going to crash, you know? But it was at the high last time of the market when it got this low for this extended period of time. Now, right now, we're seeing, obviously, very flat to downtrend in the VIX. We need to see an uptrend starting to happen in the VIX, okay? So you can put a little moving average on there if you want to, whatever. But right now we got definitely a downtrend. But once it starts, that uptrend started ticking on it, then that's when we started seeing that decline in the market. So, but it can take a few months. So when you see all these newsletters saying the market's going to crash tomorrow, you know, make sure you see some implied volatility coming back into the option market, hitting like a level of 35.40 on the VIX before you really start giving it a lot of credit. But be very aware. This is a very good time to hedge positions. You can buy puts very cheap at a very, very, very low cost to hedge off any positions that you have and just roll them up. And, you know, you can sell calls. You can do what's called a rolling. You can go in and simply do, oh, God. Anyway, but you can roll your puts. You can also roll your calls. You give about half the profit if you do that, or you can just do the puts itself and not cap the profit. on it, but definitely a good time. This is the time to hedge. This is like bigger, longer term positions when it's this cheap, because we haven't had it this cheap in a long, long time. And actually, I'm going to start pulling out some of my old archives because I have a lot of stats that I used pre-2008 on what was a high VIX and what was a low VIX. So, because this whole section right here, sort of blew things up between 2007 and 2012, the VIX just, it went nuts. And so what I really want to do is I want to pull out all those old stats, because I used to have like a whole formula for if the VIX hit this, then this, then this, then, this worked. And so I'll work on that. I'll work on getting that together. Maybe we'll discuss it on the air soon. But let's see, we got, 10 years? Let's see if we can pull 20 years on this one. I just want to show you, how wild this really is. I want people to understand what's happened. But we've had, we'd have a little bit of range. We have a couple of years there when it sort of spike up. But this right here, this whole massive thing that happened between 2007 and 2012, it sort of threw the whole VIX out of whack. Whereas before, notice how we'd stay like in a range. You can just sort of look at it. We're on the low end of the spectrum, and this is a really good view for you to see this. 9 is like the low, and we're at 11. Okay, right now on the VIX. So you see that low right there, and then if you can almost trend line it, support resistance, I guess would be a better way to put it. Like here's like the really high end was like 50. Okay, that was just it was blood in the streets type thing. So right up here at like 50, and then you can start looking at what are the levels in between that are still really high. What's the normal average? Like right there, we start hitting another resistance level, and then we go down a little bit further, and those are sort of like your 4 levels. You got like 11, 20, 30, like 50. So those levels right there, that would be your ranges for whether like it's overbought. Almost think of it like an RSI on VIX, and that will give you a lot better clue as to look at it, because if you're trying to look for another 2008, hey, it could happen, but you just got to wait till it happens. So you're not going to call it. You'd be more likely to call the 1998 type moves and stuff like that. Just looking at it as the VIX is popping up there. So VIX is starting to get back to normal in that sense. We'll see if it stays that way. But it took a 2008 financial crash for that thing to really break 50 and stay above it for an extended period of time. So I'd be looking more for like 50 being a really high number, and 25 it starts. That starts to be we're definitely obviously in a down move. That's an extreme. If it breaks that, it can definitely go lower, but it'll probably pull on back. And it's sort of cool once you start realizing this, because it's a whole different. It's implied volatility, support and resistance, instead of simply price and support and resistance, which can be a lot more helpful in a trending market. And let's see here. So I go like right over here, and I keep grabbing the wrong stupid tool. There we go. All right, so go like right over here. Say, okay, so each time it hits these levels, what can I do with it? And so I'll give you a little more practical use on a support resistance on VIX versus so like the SPX. Now you can do this on a lot of other volatility indices as well. So gold, oil, Russell. So there's a lot of volatility indices out there people don't even know about. Amazon, Apple, they all have their own. We'll talk about that right when we get back, and we got a caller, so stay right there. We'll be right back after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're going back here to the Diagnostic Trading Hour. Got Mike in from Dallas. Hey, Mike, how you doing, man?
I'm doing great, Darrell. Thanks for taking my call.
Yeah.
I don't know if you covered this or not, but, Darrell, what goes into making up the VIX, the numbers?
What they do, I can show you where they actually can get the exact formula, but to give you the highlight summary, is they take the implied volatility of the calls and the at-the-money calls and puts. So like the strike above and below on both sides there. Okay, so at the money, in the money is on both sides. Like out of the money, in the money, out of the money, in the money on both sides. So all four.
Yes. And
they take it over I want to say it's 3 months.
Okay.
And then they take the average of that. And let me show you. This is actually pretty cool.
Okay.
And so if I go to CBOE indices, if you go to CBOE volatility indices, if you just Google that, you'll find it pretty quick. But CBOE volatility indices.
Okay.
And let's see here. All right, CBOE.com/volatility. and they actually list off all the volatility indices, and they're really useful to use. A lot of people don't use them at all; they don't even know they exist. And it's it's basically how they basically make an implied volatility index based on multiple implied volatility numbers.
Okay.
But it basically involves, it's pretty much 12 options implied volatility, and then averaged out. That's the simplest summary. But they got it on gold for like gold traders. They got it on all the major indices. So they even have it on stocks. There's more they have than what they even list on their website. I don't know why they don't list them all. But
what is the website that you would go to get all this?
Well, to get the information about which ones are available, cboe.com/volatility will take you there.
CDE?
CBOE, so Chicago, the exchange. Yeah.
Oh, okay.
So the CBOE, the actual exchange website. So cboe.com/volatility, and it lists out all the volatility ones, and you go into it, and it talks about introduction, and there's a whole paper on how do they come up with it, and what is it, and all that stuff. And I mean, there's strategies and ways to use it, and but it's just like I said, it's on oil, it's on emerging markets, it's on silver, China, gold miner stocks. If you're if you trade gold miner ETFs, so you can look at the implied volatility when it's extremes and lows, and like one thing I was pulling up over here was when the market goes up and we hit this, right now 20 is an extreme for the VIX. Okay,
right.
So if you see 20 get hit on the VIX, the market's probably going to start turning back around and going up again. Okay, if you see it drop down to about 10 or 11, which is where we're at right now, you're probably going to be looking for the market to do a pullback. I mean, it may just be for a month or a week. This isn't like a real fast intraday thing. Okay.
Okay.
But for a month or a week, so you sort of expect at this point that's right now is a great time to hedge because we're at 11 or whatever, 11, 12 on the VIX, and so makes the options are really cheap, and the expectation of at least a pullback over the next month is very realistic for that to happen.
Do you use this also with the Nadex in?
I use it to let me know sort of what I should be looking for.
Okay.
So as far as where am I going to put most of my time in? Right now I'm doing a lot of directional out of the money strategies, just because things are so cheap.
Right.
And so I can't get as much premium. And then but when I see it spike back up there to 15, 20, now it's hey, now it's going to get really expensive to do that directional out of the money stuff. Now I'm going to start looking at more of that premium collection in the money trades.
Okay.
So now I'll still do all of them because you're talking one day. It's not as big of a deal.
Right.
But it's really easy to find cheap out of the money stuff when VIX is so low. It's really easy to find, expensive premium that's really far away when VIX is really high. So you can trade both of them in all cases, but this is the low hanging fruit at this time. So instead of doing expiration premium collection trades, we're all going in the last 15 minutes. I've done a lot of those on the air here, and I'll hop in and grab gold. We got 10 minutes left. I'm more likely to go in now and see if I can buy for $15.
Right.
With a $15 risk to make 85 on it because it'll be really cheap and it may only be 5 or 10 ticks away. And I got 15 minutes to go. Whereas if volatility is really high, that may cost me $30 or $35. So I'd be more inclined to go in and find a $20 one that's 3 points away, that's in the money. And so it lets me know, hey, this is where I should be focusing, and I shouldn't be shocked because if you don't know that, then you try to force the trade.
Right. Yeah.
You've been doing premium collection every day, every hour, and it's been working, and then all of a sudden, well, I can't get that premium unless it's really close, and you don't know why. You don't understand that there actually is implied volatility is low. That's why it's so close now, and now you should change your mindset and be willing to change up your game. And go, now I need to take advantage of that cheap premium, and the best way for me to do it, instead of trying to force a trade, is to go in and take advantage of the other side and go, hey, I'm going to go in and just risk the $15 because I make a ton, even if I lose, and it's so close. My probability is actually really good of the trade doing well.
Excellent.
So, yeah.
Okay. Well, Darrell, thank you so much. That makes a lot of sense, and I wasn't aware of some of that.
Awesome.
So, well, thanks. Thank you so much.
Hey, thanks for listening. Thanks for calling in. All right, so, but anyways, check those out. And just to go over this, on the CBOE, like I said, you got gold miner stocks, you got Brazil, you got energy sector, you're going to have oil, gold, IBM, Goldman Sachs stock, Google, okay? So, if you're trading any of these, you got the Dow, you got the S&P 100, you have NASDAQ, obviously. So all these that you can take advantage of. And there's even more of them, like I said, than what they're listing right there. If you go over to IQ Feed, it's my preferred data vendor, IQFeed.net, and go to their symbol lookup. And what is it? I wanted to say if I just type in volatility and hit search, we'll see what we get. We may get too much stuff. But it's a lot of the .xo ones here. But let's see, volatility. And we'll put in just index. That'll lighten up the list. Because, yeah, we have 471 right now. And let's see how many we get with that. All right, there we go, 143. Okay, that's a little better. But, I mean, we got 10-year Treasury notes. Even city volatility. There's some stuff I don't know what it is. But Brazil ETFs, like we talked about, crude, EFA, emerging markets, gold. Let's see, a variety of interest rate ones. We got mid, 3-month, near-term volatility indices. You got OEX right there for the S&P 100. You got the S&P 500. You got ones for different months. You got soybeans, gold. You got corn. Let's see here, small cap 500. So whatever it is that you're into trading, or if you're in a stock you're trading in a stock that's heavily weighted in that indice, it could be useful for you. And let's see, going on down. I mean, these are like $5 down onto a basic subscription. So, and this is the only way I know to get all of these. So a lot of these are in Thinkorswim. But let's see here. You got J.P. Morgan. You got a whole lot of the MSCI. You have the Qs. So you can get one directly for the Qs, not just the NASDAQ futures, but the actual Qs themselves. A lot of different emerging market ones. You'd have to dig into the details to get all the stuff that you're looking for. Russell 1000. So you got ones that are based directly for the CME itself. So that way, like whenever I do this, I don't pull up the VIX when I'm trading ES. So there's certain ones that you want to pull up. You want to put the one that's tied to the actual future, not just the VIX is sort of like that broad market volatility, greed, fear index. But I'll get in. I'll make sure I pull up the one that's tied directly to the future contract when I'm doing it. But yeah, there's like a whole lot of different random Russell, 1000 ones depending upon what exactly you're looking for. And I mean, there's a lot here. We got the velocity shares. So if you ever trade those, and over on the New York Stock Exchange, the DAX. There's a volatility indice for the DAX for Eurex. So if you're a DAX trader, you got wheat. So there's a lot of them on here. And if you'll use this, it's really helpful. It lets you sort of chart that implied volatility out and see when it's high, when it's low, when it's to an extreme. Usually you're going to get, like I said, the market's going to start pulling back up, going back in the upside. And if it gets to the extreme low, don't be surprised to see it pull back down. That's a good time to hedge off. And you can use this to, when do I want to put on puts? So I'm not just buying them every month, but I am buying them, where it makes sense. And also, where do I take off? So market's falling down, and like right here. And then all of a sudden, implied volatility starts dropping a little bit during this month. Guess what? It's time to take, the market's still down. It's time to take off those puts. Be ready to put another one on if it keeps going. But it's time to take them off because the market's probably going to pop on back up. And now I got my hedge on, which means I can actually make money, still have my position. The market goes back in the direction. And then when I see it get back to an extreme down here again, guess what I do? I put on another put. And then the market pulls back down. When it gets up to an extreme, I can take that put off for profit, lock in those gains on the put, and then, be ready to put on another one or get out if the market keeps dropping. So, but it allows you to stay in those positions and hedge it off and actually make money on these down moves in the market while keeping your long position on and not closing it. Anyway, hopefully this gets a couple different ideas to get you thinking. But you can do married puts, you can do covered calls, obviously to help pay for those. And there's a lot of ways you can combine options. You can also even do this on an intraday basis, trading like Nadex spreads. You could sell a spread out of the money and buy a spread out of the money. just like sell one above the market, buy one below the market, vice versa, to use as a hedge for your position. That's really cheap. And it may not do a whole lot for you immediately, but it could work out really well. And let's see here. A couple other things we can check into for the other remaining plans for the week that I wanted to pull. And some of that applied volatility is just a lot lower than we usually get. So it's pretty cool when it's all working out that way. I can't believe how low some of it is. And, all right, let's hop on back over, wrap up our news. We got the GDP report done. 30 ticks. Let's just go for 30. Make it a very simple plan. 30 pips, 30 ticks, whatever. Maximum profit on the one bought, the one sold, Iron Condor expiring at 10. And that'll give you a few dollars. You could go for 25. You'll probably break even on about half. So ideally 30 or more. But I'd say we'll make a minimum 25 just in case it's not there, because a lot of them do only move a few ticks by the end. And okay, so that wraps up that one for jobless claims. It's going to be happening at the same time. And let's see here, looking at the 10 a.m. moves, that actually lines up with us just fine. It doesn't hurt us looking at the history. So that should work just as easily for jobless claims. Also, jobless claims being every Thursday, you can use your channels, your average expected moves, to see what the move expectation is. Because again, it's a report that comes out at the same time every week. And then we got pending home sales at 10 a.m. So let's see if there's something to that we can take advantage of. That'll actually wrap up Thursday for us. And so we can look at 11. We can look at end of day. So I'm looking at end of day. I want to see what I can pull off here, because I love doing end of day ones because you get more time. And the thing can move around, rock around, do whatever it wants to. And I'm looking at every single release on pending home sales for end of day. If we hopped in, basically 30 minutes before the release, 15 to 30 minutes at most. Okay, so we'll say entering at 9:30 to 9:45. Okay, for a 3 p.m. expiration, then $25 to $30 at 3 p.m. would be perfect. So the reason that we, so yeah, I'd say $25. If you can get $25 entering at 9:30 for a 3 p.m. expiration, Iron Condor, buying up below, selling above, meaning the max profit between the two combined is $30. Then that's your trade. So that's the one you can do for pending home sales. Very easy. So we have one that we can enter in the morning on GDP, and we have one we can enter after GDP on pending home sales. I actually like the pending home sales one better, just because I don't see any really moving massively. I'm trying to see if there's some I'm missing, but there may be one or two. Let me go and just no, it's the move that happens usually off that GDP number if there's a big surprise. So really, the safer trade out of all of them. You can do GDP. Like I said, it's worked 8 out of 12 times, or 10 out of 12 times in the last few months. But pending home sales, literally, it's like every one of them has stayed easily within that 25 pip range. So yeah, enter at 9:30 for 3 p.m. expiration, Euro-dollar, Iron Condor, and nice simple trade. When I say $25, it sounds small. You can do 10, you can do 100, right? So it doesn't have to be small. It can be 250, it can be 2,500. You can do as many as you want to. I'm leaving these things on, so I'll even out trade the market on some of them sometimes because I'm usually not taking them off at all. But you don't do that until you've got a lot of experience with handling that, as far as doing anything larger than the bid offer size available. All right, stay right there. We'll come back and we'll take a little sneak peek at Friday and the Canadian GDP report that's going to come out. Stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. So wrapping up things and looking at what we got. We're going to have the Canadian GDP coming on out on a Friday. So let's look at what we can see there on the USD CAD for our report later this week. And wrap it up the week. And it looks like, so I'll look at the 11 again, or 10 o'clock, and I'll look at the 3 o'clock. And scrolling down, looking at both of them. What I am seeing so far, flying through these, is it's about the same. You're going to need about probably 35 to 40 pips for a 3 o'clock. on Iron Condor, meaning the total premium collected between the bought spread and the sold spread needs to be about 40. You can actually go quite a bit lower. You can go down to about $25 on the 11. So, I mean, it's not like just a massive move, but so enter at 8 for 11, or actually you can enter at 7. So enter at 7 for the 3 p.m. for $35 minimum, okay, profit. Or enter at 8 for 10 a.m. for a $25 minimum profit on the Iron Condor to do an Iron Condor on the U.S. CAD GDP on Friday. And we have a couple other reports. They're not that major. We got personal income and outlays happening. It's really happening at the same time. We're already trading the, dollar CAD, so I wouldn't even worry about it. And then we have housing starts. And is there even anything there? I can't believe I actually got stats on that now. Let's see if there's anything to that we can use. And I'll let you know. That's a 1 a.m. trade, okay? So it's early in the morning trade. Thing is, I mean, there are, 2 o'clock, 3 o'clock, there's all sorts of expirations. But you got like a 3 a.m. expiration. So my thought is actually looking at this and going, okay, so what if I wanted to straddle or strangle this for 3 a.m.? Is that a realistic thing I can do? And let's see, for 3 o'clock, I mean, we're looking at a pretty, not a big market mover at all. Not a big surprise. But, I mean, you're talking like 5, 10, 20, 20, 10, 5, 5. There's like 140 tick move in the last 12 months. So if you could pull off a 25 tick, entry on the trade for like enter at midnight for 3 o'clock. If you get a $20 Iron Condor on the U.S. yen, again entering at 12 for the 3 a.m. expiration, okay, and get $20. Very simple one. If the premium is there, again, housing starts not a big mover. I wouldn't be surprised if there wasn't enough premium. It literally might be like a $10 premium. So, but if you can get $25, $20 minimum, $25 ideal. But if you get $20. Iron Condor at midnight, 4 a.m. on dollar yen, then yeah, I would definitely, I see no problem with going with that at all. So the one trade that moved, you'd be like at a 1-to-1 loss. So the rest of them, you'd be, break even or profitable on just about every single trade. So very simple Iron Condors, not very hard to do them. Don't take a lot of time. You don't have to sit there. You don't have to babysit them all day. You just put them on and let them do their thing. And that pretty much wraps up the news reports for the week. And, well, I guess we're done. I just want to really get all those done for you. Tomorrow, we're going to dig into a few different tips and tricks on the scanner and show you some of the things that I do to make the most use of it. I hope you'll have a great day. And I will see you tomorrow right here on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.